And good morning and welcome to the VSA Capital 5-Minute Morning Miner on Wednesday, March the 29th. We're halfway through the week. It's going to be a long old week. How you doing, Paul?
I'm fine, thank you. Trying to wade through all of these late quarter releases now, so lots of them in mining.
You wait till you get to Friday, last day of the first quarter. It'll be a nightmare. Anyway, let's get going. Let's start with what I call the Carlsberg of mining. Because if Carlsberg did mining, they would do Central Asia maples, camel as it's known. Look, it's all very steady as she goes, which it always is with camel, and they pay out 47% of their free cash flow as dividends, a 20p dividend full year. What are your views on it, Paul?
Yeah, the final dividend they reported today on the full year results was 10p, so that brought the full year to 20p per share. Steady as she goes on the production statement here too. 14,000 tons of copper production, 21,500 tons in zinc, and 27,300 tons in lead. That's a little less on the zinc and a little bit more on the copper and the lead than it was this time last year. They put out forward guidance here that's a little bit conservative here, where they're going to have, they think, a little bit less on the copper side, or at least predicting that, as well as a little less on the zinc side, but maybe a little more on the lead for concentrates. And on the 23 guidance, they'll complete their paste backfill and dry stack tailings there for the Sasa mine, as well as the initial phase of a central decline there at Sasa in Macedonia, North Macedonia. And then they'll have they think they'll have the solar plant completely built out there for the Kunrad copper leach in Kazakhstan. They did take a $55 million impairment, but that is due largely to non-cash charges on routine impairment tests that they run against their assumptions on the exchange rates of the U.S. dollar to to the euro and the tenge, as well as to the assumptions on metal prices. So the bottom line is they're simply adjusting the balance sheet to reflect what the outlook is on the U.S. dollar and the U.S. metal prices.
Yeah, they do also talk a little bit about potentially another project where they talk about the number of projects they've done DD on. They've signed NDAs on 17. They've visited 2 sites. They continue to look for new deals. The reality is actually Sasa is such a huge project, isn't it? I mean, they can just carry on with Sasa to a certain extent, but I think the market would love them to get to grips with a good deal, a nice sort of tricky one where their skills as a management team, which clearly are very strong, can be put to good use. That's what.
And they have the debt. And they have the debt completely paid off now, so they're completely free of debt on the balance sheet. So that means that cash builds here as the quarters build their profits. So that just makes it that much more compelling to do a deal.
Sometimes you just have to jump in the water, don't you? But it's always scary. Anyway, there we go. We do like a camel. Unfortunately, the market is it's actually off a tiny bit. 5%, just because it would love camel to do something. But I mean, it's as a stock, it's actually just been really steady Eddie the last few years, trading between about 240 and or £2.280. But
and one of the better dividend yield payers as well, concerning it's a mining stock. So
terrific yield player. So I mean, I think all the shareholders are pretty happy. No problem there. Anyway, let's move on to actually. There's 2 interim results today that are inextricably linked, which is Tectonic Gold and Kazira Global. Obviously, the reason they're inextricably linked is they both share a project down in South Africa, the mineral sands project. So, Paul, what was your take on those 2?
Well, talking specifically here about Tectonic Gold, as it's a VSA client of ours. It's a statement there on their interim results, and to best summary statement is to say they managed to get some things done despite the obstacles that tried to get in the way as far as their timelines to completion and costs are concerned. They did finally complete the latest round of drilling on the Goldsmiths Reef mine in Queensland on their Specimen Hill project, and that drilling did prove depth extension of gold grades under the historic workings to some depth. So that'll be something that hopefully they'll be able to put a new drilling program into, just to see how much volume they can put together here on Goldsmiths Reef. They also did get the mining license issued in that joint venture with Kazera Global for mineral sands production there. They do also have it funded with a Black Economic Empowerment Consortium, such that they get most of the economic benefits, while the payout of roughly a 45,000 million or 45 million pound valuation on this loan is paid out. And they do have an obligation on some of the mine tailings there from previous diamond mining in order to try to extract the diamonds as they take out the heavy minerals as well. Their loss for the period was only 105,000 pounds, so very nominal loss there. And their cash position at 31 December was just shy of 200,000 pounds.
Yeah, you don't need to worry too much about the cash. They get a load of R&D tax credits, which are about to come in again from the Australian government, which will cover all their costs anyway. And I think, there's no question that they're looking for a farming partner at Specimen Hills. So actually the cost of another drilling program won't come to them, it'll come to the farming partner. So look, it's sort of, again, we're sort of waiting for something to happen really with Tectonic. There's a lot of value inherently in there, and it probably is all lying within the mineral sands, but it's just a very complicated sort of joint venture there. As you say, Tectonic own 10%, but they have the economic interest of the BEE 30%, so that gives them 40. Kazera has 60. It really needs sort of, for my better word, cleaning up and to a certain extent for the market to value it. Because Kazera also, we just saw AMS, which is a Singapore-based outfit, but also actually it's run by a guy in Melbourne, take out Richard Jennings at a 50% premium to the current share price. Now, I think it's good to get rid of Richard Jennings, or at least that's what the market's perception was, which is why he's prepared to pay a premium, because he's not particularly appreciated necessarily in the stock market. That's not my view, but that's just sort of the market view. But that stock's gone nowhere either, because again, I think people just find it so complicated of who owns what and how does it all work. Is that a fair summary, Paul?
Yes, I would say that was a pretty succinct way to put it. Yes.
You've also got, Dennis Edmonds, the CEO of Kazera, is on the board of Tectonic. It's just, it really does need sorting out. Anyway, anything else, Paul?
Yeah, I wanted to quickly cover two things on the exploration and mine development stake, both of these on ASX listed companies. First of all, Ecuador copper gold explorer Sunstone Metals, they have confirmed a new ore zone discovery on their Bramaderos project in Ecuador. It has existing nice fine grading about 0.5 gram gold per ton, as well as byproduct copper at Bramaderos. But this target, called Limon, is outside what they had estimated to be the upside potential on the project just not that many weeks ago. The Limon target showing a hole of 177 meters grading just at 1 gram gold equivalent per ton, beginning from near surface. Wanted to point out to investors here that there are a couple of media releases subsequent to this that are out on places like Proactive, but what those media things haven't mentioned is the fact that this drill hole 17 was put down on a zinc anomaly at Limon, not on a gold anomaly and not on a copper anomaly. And the microscopic analysis of the breccia in the core shows that the zinc mineral sphalerite is intergrown with the free gold in this particular zone. And the CEO of Sunstone says that this is the way it's supposed to look for a nice, juicy mineralized copper porphyry is to have this peripheral zone to be showing in copper or in gold and zinc. So wanted to make sure investors understood that. The second point quickly to say is that Jervois Global, the integrated cobalt producer listed on the ASX, has decided to halt construction completion on the Idaho Cobalt project. They're in Idaho, and they are citing the current low cobalt price as well as the inflationary costs on construction. So they're choosing to hold back the start up of the mine and ore body, essentially to get a better margins when they do so. It's
Funny, isn't it?
about 80% complete, so it's not a insignificant decision to make.
It's funny, isn't it, Paul? 3-4 years ago, everyone was raving about cobalt. It just wasn't enough. It was the best thing since sliced bread, and now no one seems to give a damn. And it's just funny how some of these commodities come in and out of favor.
And the volatility around trying to invest in them, I think.
Yeah, not easy at all. Anyway, there you go. Very good, Paul. Thanks a lot. We'll speak again tomorrow.
Very good. See you then.